Let's uh, let's start with some real serious concerns that I have of what's going on here. For whatever reason, the market is simply not pricing in the supply chain disruption that is right before our face. We could argue about the severity of the coronavirus. We really don't know who's right or who's wrong there at this point. Are they underreporting cases? Are they overstating it? Who knows? Right? But we do know that for the most part, China is closed. Now, what's driving this market, folks, that was from the market wrap I put out on February the 20th. And at that point in time, I was in shock that the markets were in complete denial of what was being done to the supply chain right in front of their eyes. And we knew it wasn't going to end well. And sure enough, last week, the chickens came home to roost. And the problem is that it's really just beginning. So if you're open-minded, there's a lot of money to be made. Unfortunately, it's going to be to the short side. We went into last week short of the market. We were short of the triple Qs of what you're looking at right now. We were short using the SQQQ. That's a leveraged ETF, putting you 3 times short of the triple Qs. We booked those profits last week. We were also short of Amazon. I wish I could say we got it out of the bottom. We did not. We were right here. So I booked profits on the morning gap up. Still, nice profit. We were using the 2,000 put contracts, and I forget what the expiration date was, but we made some good money there. So a very good week last week. We also booked profits on, we finished up doing a wrap up of 60% of our profits on, let's go to it, on the TZA between a price of around $36.50 and $43 per share. So we did very well there. We still had 40% of our long position. We did begin nibbling back at considerably lower prices on Friday afternoon. And unfortunately, I wish we would have closed back above $25 per share. That didn't happen. So is there an all clear yet for the gold miners, for silver stocks, for gold stocks? I don't think so. I don't think just yet. So definitely keep cash on the sidelines. There's going to be great opportunities to short this market and to begin buying gold stocks, silver, and gold. So a lot to happen here today. Tonight we're going to be doing 6 p.m. Eastern Standard Time. I'm going to be doing a Sunday night stock market futures live. That's where we review the futures market. And I want to point out something that I don't like, and I'll take it as a sign that you have some opportunists out there trying to take advantage of the general public. And I'm holding ZeroHedge.com responsible for this as well, because they publish this stuff. This came out early this morning. Now, perhaps they're right, for all I know. I've never heard of this service in my life. Weekend Wall Street chart. And they're saying that at current, the odds of a 500-point gap lower are probable on the Dow. And the last I looked, it was at 600. So we're going to follow up tonight, see whether or not this is accurate. If not, the pair of brass nuts that Zero Hedge has on them for publishing this type of stuff, this doom and gloom stuff, I don't like it. I'm not here to cheerlead the market, but I'm certainly not here to fearmonger either. That's not what I do. So please join us tonight. Let's see whether or not they're right. Let's get to the charts that we're watching for the coming week. So I'll kick things off with NUGT. Again, we sold 60% of our position early last week before the big gap down. We did begin buying it back, and on Friday's position, we're about even on it. We nibbled some right in the pre-market the day that it broke. It was breaking out. I got to show you this. Let me show you this. Just goes to show you, you need to stay small and don't chase the market. Learn from my mistake here. So here we were on the 27th. That was what? Thursday. Pre-market, we are breaking out. I got a kick in my step. I'm getting happy. We're going to rally here. And in the pre-market, you could see that they were bidding NUGT up higher. They had broken it out of this 4-hour wedge. And I said, you know what? It looks pretty good here in the pre-market. Let me throw on a few shares. We had book profits earlier in the week up here. I said, let's nibble. Let's give it a shot. Bad move. All right, so don't go chasing this market, right? But we were buying aggressively down here. Ideally, though, this has to hold. And we did sell, just for full disclosure, we did sell covered calls, 30 strike price, generating income, a little bit of a hedge. And we'll see what happens this coming week. So NUGT, we're looking to reload on, slowly but surely, nibble, nibble, nibble. So we're watching that. What else are we looking at? We are looking to short the small caps. We had been watching the TZA for months, and I drew these lines. These lines have been up here for quite some time now. And it was setting up this most beautiful consolidation. Yet price was still pressing lower. I'm saying, man, there's something underlying here. There's something going on. And sure enough, last week, the TZA, which is, again, a leveraged ETF putting you short of the small caps, it broke out in RSI and on price. A beautiful breakout. I'm looking for a pullback and a retest of the breakout point. Then we'll go looking to reshort this market. Again, we booked our profits last week on our short trade. So we're going into the week with no short positions. What else are we looking to do? We want to short the Qs again. You can see they came off the highs of the week. I think that we'll probably get a halfway decent rally at some point in time this week. You had to be booking profits here, folks. You had to be. You stick around too long to the short side, eventually you're going to get burned. We're also looking at Vietnam. So while everyone is out there and they're talking about coronavirus this, state of emergency that, I don't care. All I know is a couple of things. One is that, yes, the infection rate of coronavirus is global. It's global. Our cases probably being undercounted, probably. Is the mortality rate higher or lower than Ebola or SARS or bird flu? It's a lot lower. So just because you get it doesn't mean you die. So we'll come up with they may not come up with a treatment right away or a vaccine, but they will come up with a practice, depending on what country you live in. The United States is pretty good. Other countries are pretty good, where a protocol for identifying the indications that you have the disease and then follow through with a program, a regimen to get the cure. It's just because you get it doesn't mean you're going to die. And eventually, I think the headlines are going to change from who's undercounting, who's underreporting, to, okay, we're getting a little bit nuts here. And the conversation is going to change from, okay, you're going to live, we're going to make it through this, to, are we going to allow the Chinese to ever be put in a position of power like this again? We have way too much of our supply chain, not just us as in the United States, us as a globe, way too much in the hands of a bunch of totalitarian thugs who arguably may have even created this thing and unleashed it on the world. I'm not saying they did. I'm open-minded, though. So where are they going to go? Because it's going to be a foregone conclusion, whether it be by just pure business decision or by law. Get out of China, at least a portion of your supply chain. They're going to Vietnam. Vietnam rallied on Friday. They stand to be a beneficiary. Other countries that may benefit. Indonesia may benefit. So we'll have to do more research. Look at this bullish key reversal bar on Friday. Is it time to go running in and buying these countries hand over fist? No. More research needs to be done. I happen to like Vietnam quite a bit. Indonesia, to a lesser extent, perhaps it's going to be India. But they are going to benefit. And don't forget, President Trump was just over in India. So I have no doubt that the conversation had a little bit to do with shifting that global supply chain away from China to their regional enemy, the Indians. What else do we like? Jazz Pharmaceuticals. Very, very oversold on an intraday basis, right? I'm expecting a rally here. Probably have to fill this gap. Would I be an investor? No. Weekly chart is horrible. You got to get in, scalp your profits, and get out. More to come on this one, members. Cassie Pharmaceuticals. I've been talking about this one for a while. I'm not going to trade two pharma names at the same time, especially in this market environment, but this is like a coiled spring, so it's going to be either Jazz or Cassie. RSI. I spoke about this first time, I think 3 weeks ago. It still has RSI down below 15. And it looks like it wants to go lower. Fine, let it go lower. Do you know where the historical support levels are? You need to know that to get involved with this stock. My members do. Join us tonight. We'll talk about it. If you're interested, let me know. The next chart up, GLOP. Still extremely oversold, consolidating nicely. I think that we're going to rally, probably this week, a relief rally on GLOP. Take note of RSI is at 16.22, and Stokes are now hooking up. So things are looking brighter. So in this quagmire of what we're dealing with right now, it's always darkest before the storm. And tomorrow morning may just very well be another storm. The key to survival, as Gordon Gekko said in Wall Street, you can't piss in the tall straw with the big dogs without your capital reserves. If you're on margin, lighten up. If you're too overly weight one position, lighten up. Sell till you can sleep. Because in a bear market, today's lows may be tomorrow's highs. So please, folks, worry about your liquidity. Join me tonight, 6 p.m. Eastern Standard Time. And hopefully I'll see you there on YouTube. There's a link down below in the video description area. Be well.